Number 6, tax on split income, or TOSI. These rules have been around for a while, but they were updated at the end of 2017. Essentially, they reduce or eliminate your ability to pay dividends to other family members and have it taxed in their hands. You used to be able to do this fairly simply by having them as shareholders of your company or beneficiaries of a family trust, and you could pay these dividends out to them. Now doing so will attract the highest tax rates, except for certain circumstances, like if they work for your company. Number 7, individual pension plans, or IPPs. This is your way of building a defined benefit pension for yourself. You have to be around 45 years old, and you have to have paid yourself a relatively high salary for this to be effective, but it can be a great alternative for those conservative investors who want a guaranteed income stream later on. When you create an IPP and make contributions, those contributions are deductible to the corporation, and the contribution limit is generally higher than what you could contribute to RSPs. There's additional benefits like indexing and survivorship benefits that can be purchased as well. That's another way of getting assets out of your corporation and into a different plan, which can reduce the amount of passive income it generates and also keep those assets out of your estate. Rather than paying probate on all those assets, you can name a beneficiary directly, much like you can with a regular RSP. Number 8, corporately owned life insurance. Using cheaper corporate dollars to pay for your life insurance needs is a huge benefit. What I mean by cheaper dollars is that the income that you earned in your corporation was only taxed at 11 or 27%. That's likely much lower than had you earned that income personally. The death benefit of the insurance policy is paid to the corporation as beneficiary, but most, if not all, of that death benefit can then be paid out tax-free through the capital dividend account to the beneficiaries of your estate. Number 9, estate freezes. Estate freezes are typically used to introduce new shareholders to your corporate structure. You exchange your common shares for fixed valued preferred shares and then have new growth or common shares issued as well. These new shares are usually given to a trust or to adult children and spouses, and any continued growth in the company now attributes to those new common shares. The preferred shares carry all the voting rights, so you don't relinquish control of your company, but if your company continues to grow, all that additional growth is now attributed to the next generation or to a spouse. You can also use family trusts in this structure as well, giving the new common shares to a family trust, which gives you a little bit more control. Number 10, secondary wills. This strategy is not available in every province, but it is available currently in BC. Typically, when someone passes away, their estate has to apply for probate. This is the process by which the provincial courts verify the last will and testament of the deceased. It's used in cases where third parties hold assets on behalf of the deceased. So think non-registered investment accounts at a financial institution or a bank. The probate process indemnifies those institutions from giving out the assets to beneficiaries. When probate is applied for, any probatable assets have to be included on the probate application. However, some of those assets may not be held by a third party. Think the shares of your corporation, art, jewelry, expensive antiques. But you can create a second will that deals specifically with those assets. Doing so means you can separate them on the probate application and avoid the probate fees on those assets. Again, in BC, probate is around 1.4% of your estate. So on a $10 million estate, that's $140,000 of probate fees. If the value of your corporation when you pass away is $5 million, that's $70,000 in probate fees that might be avoided by using a second will. If you found this video helpful, please share it with your friends, family, and colleagues. And if you'd like to discuss any of this further, feel free to get in touch.